Good. It seems to work. Cool. So what do we got here? 15-minute chart on the ES on Wednesday. Well, it's already Wednesday. So that was a fun move short yesterday before the New York session. And the New York session was primarily a whole bunch of garbage. Unless you're a scalper, then you'd enjoy it, maybe a little bit. And again, overnight so far, overnight Eastern time, it's the definition of filth, the way I like to see it. Very simply, no room to the left. Every candle overlapping each other, and even difficult to identify obvious support. You could kind of put it here. Sorry, obvious resistance right here. You kind of have it, but even the breakout's not great. And even if you're looking at a breakout, you got this overhead lower highs. So it's very difficult to identify where is a clean, flat area where it can break out and go. Even here, when it did break out a little bit just recently, doesn't really want to go, it seems like. So anyways, I just put the level there and another one down here and say all this is just chop so far. If you like to see it this way, getting these lower highs, these higher lows, which could lead to a good breakup, but you have these lower highs on this side as well. So it's all, contradictory. Can't trust it. Nothing really worthwhile. So I had to look at this a few hours ago, and looking at it now, it hasn't changed. It's the same garbage. So just leave it alone and see what happens. Things will clean up. Maybe today, maybe in the next few days. We don't know. And then we'll see what happens. But as far as I know, Hamza's had a good time so far today with gold. Yeah, Hamza, you want to tell us a little bit about that? What you've been doing last few hours, if you're up for it?
Yeah. Do you want to pull up the chart?
Yeah, go ahead. Share your screen. And
not really sure how to do that.
Okay, no worries. I'll put mine up. Is it MGC you're trading?
Yeah.
Okay. MGC. Oh yeah, look at that. All the way down, huh? So what have you been up to in here?
So we had yesterday's low at 41.10ish, I think.
Okay. Yeah. About here.
Yeah. So it was just a break and retest. By chance, I came to the screen around 8 a.m. London time, and it was pretty much there at that point. So I was on the 30-minute candles, and then we got a new 30-minute low, and from there it was pretty much just smooth sailing.
Nice.
I can't say I did anything fancy, because I mean, it's one of those rare days when it just sort of went. I didn't hold the thing the whole way. I was I got an entry around 41. Sorry, one sec. So my first entry was 4095.
Okay, around here. Yeah.
Yeah, it was on the 1 minute chart, and then I exited around 4075, and then it was still really weak. So I took another entry around 4078, and I covered that into the big flush through the swing low. So on the 1 minute chart, if you have a look from 4050, the price sort of just spiked down to 4025.
Yeah.
And I covered sort of midway through that candle there.
Okay. Well, good. You're able to identify a setup, and then it turned out to be a decent trend. Off you go. Cool. And getting involved again and again. So you exited and then you got in again when you saw the momentum.
Yeah. So when I had enough profit, I sort of just exited, and I thought I'll reassess, see if this thing holds the trend. And when it did, then I just re-entered.
Nice. Yeah, I like that. And you need a definition of what's a trend. If you're looking at a downtrend, for me, the key point is always these highs. The highs are getting lower and lower. It's telling me the sellers are stepping down lower and lower. That's the key point for me that defines a trend. You can always draw those channels that people like to draw, but it's the highs getting lower that matters the most.
It was very steady, just really weak bounces. Every time it came up a little bit, it would just come straight back down. And I don't know, maybe something's happened, but all the metals are like deep red. So like silver's down 5%, copper's down 2% as well.
Okay. Well, there you go. Good job catching it.
Yeah, thanks.
What's the news on that though? Anyone have an idea on the metals news? What happened? All the miners are out of business, or what's going on?
No idea.
All right, let's have a look at this though. 30-minute chart on gold. You had support here, and it got messy in that area. But when it did go, it did give you a retest. And if you're unsure about that one, you have this major wick down here. Wait for the break of that low. And you get close enough to a retest, and off you go. So there were a few decent opportunities here. And if you're unsure about that one, you have this low as well. Break and retest, off you go. So yeah, some decent opportunities. Again, once it's in a trend, you have multiple opportunities to get involved, right? If it's a healthy trend, which is the price goes and then consolidates, and it goes and it consolidates, that's healthy, right? If you have that, then you get multiple opportunities to get involved and add in and all those sorts of things. So yeah, good job catching this. Very nice. Yeah, Parsa, go ahead.
It's even possible to catch it earlier. If you look, it went all the way down. It was like a first leg. Then we had a pullback. Actually, look at the pullback. Yes, exactly there. Then you have the doji. Maybe you can zoom in then to the 5-minute, 15-minute chart to see some exhaustion, 3 candle cap pattern, whatever you like. And from there, you can catch the second leg here all the way down.
Yeah, absolutely. Yeah. Plenty of setups in a healthy environment. When the price action is healthy, there's plenty of opportunities. Now look at this one, and here, let's do it this way. Let's put it on the 15-minute and put this on the 15-minute, and show you the difference of what's healthy and what's not healthy. Look at these two different pieces of price action. This is the ES, and this is the gold. Just looking at the candlestick patterns. I mean, it's so obvious what is healthy and what's not. This is clean. This is a mess. And for me, the easy way to identify it is there's no room to the left over here. And over here, you can see when it went up here, there's room to the left. And it moves, and it pops up again. It's just a pullback. It's not chopped. And it breaks this low again. There's room to the left down here. And again, so you can see there's lots of room on the chart, clean, clear spaces, room to the left of the price. Over here, you haven't had room to the left in the last, 12 hours or something. So two obvious different kinds of price action. And when it looks like this is when, I go to the golf course or go fishing or do something else. When it looks like this, then I'll pay attention and see if there's money to be made. So that's a pretty simple way of identifying when you should participate and when you should not. Or rather, when you should even think about participating and when you should not. That's very important.
That's Tim and Nikki about us. How you were doing. That's what she's learning about.
You get a hot mic, Brian. How you doing?
Oh, sorry. My bad.
I love it. It's always comedic. Well, one time we had a hot mic. We got the guy's social security number, his credit card details, got everything.
Let's go.
What do we got here, Brian? You said inside out trade in effect, Alan. 8 a.m. range will add if it can break the retest of the. What are you talking about here, Brian? You want to share your screen and tell us what you're looking at? 8 a.m. range. Well, this is very much a tight range. So if you, we also had this kind of yesterday, but you know what? In an interesting way for the people who like trading the New York Open, looking at the 15-minute chart on the ES, if you identify the pre-market area, which is, I'd say it's about there. Maybe. Just bring it back a bit. It's not really pre-market. It's just all the overnight action. Pretty much. That area, yeah, call that the pre-market area. If it breaks up, and it looks like with these higher lows, most recently you got higher lows. If you get the breakout here, you may get a scalping opportunity up to the previous day's high right there. On a 1-minute chart, if you're really outstanding, you might get 2R and be thrilled with your life. But then I'll come and tell you, man, you can make 40R. So that's why I don't really trade the open anymore. But again, the setup is kind of there just because the price has not moved overnight. If it breaks out of its range, you may get a scalping opportunity at the New York Open with all that volatility that's bound to come in. What's interesting also is if you get a false breakout to the upside, because it looks like it's going to open up in this area. You get a false breakout, then you can get ready for the breakout to the downside, and that's basically zooming out. Nothing more than a continuation of what we've already had so far this week. And that's where I'll be interested. If that happens, it'll take a few hours most likely down in this area, break and retest. If all that happens, then we got plenty of room to run. And if we still got plenty of turmoil in the world, well, it'll run. It'll run to down there. So again, see, zooming out, looking at a bigger picture, a lot of people are excited about scalping from here up to yesterday's high in this area. Really, that's not where you really make money. That's where you sell a lot of excitement, entertainment, dopamine, all that stuff, but it's not where you really trade. Trading money is something else completely. I think it's to the short side here if it happens. If we're going long, I mean, you have yesterday's high. If it breaks through all that, then I'll look at it. But yeah, for now, not much on this. Not much to look at. Anyone figure out why the metals have been crashing? I mean, Hamza's doing some
Probably some news.
crazy news. Yeah, what kind of news? What are we doing? Hamza's making a big $1 billion deal or $1 trillion deal in London with the futures market. You know, he's got all that going on. The copper world and all that.
Did you see what's happened to the yen?
No, I have not looked at it.
It loses so much on value. The last time it was more than 20 years ago, and they needed to have an emergency meeting middle in the night. They needed to wake up everyone.
Oh no, the Japanese are at it again.
I do not watch the news, but after it happens, I get to know that there's some sources here, there. Hey, have you heard about it? And I'm so like, no, I do not read or listen to any news. What did happen? Actually, I just listen to the candle bar here. They're speaking to me.
Mm-hmm. There you go. That's what the 80-20 of it is, right? Just watch the candlesticks. They tell you everything you need to know. Very, very simple.
Is some nonsense.
Even though I trade the ES.
That trade that you took on the ES yesterday, that big sell-off.
Yeah.
They were blaming the Koreans for it because I think the Korean stock market fell 10% on some bad Samsung news or something.
Really?
Yeah, something like that. And then it's just nonsense.
Yeah. Wow. See, the trade is all over like 24 hours ago, and now I'm hearing about something about Samsung, Korea. What does it matter? The candlestick moved, you're in it. That's it.
Yeah.
So, yep, it's all nonsense. That's right. I think the news and all that matters when you're looking at swing trading and investing, and then there's a whole different world over there. Specifically, more in swing trading, the news tends to be impactful. But when you're trading like this, what we're doing, at least what I'm doing, is it's not day trading. It's a fair bit beyond that. But it's still firmly based on price action. And, I'm watching the 15-minute chart, which is still relatively small compared to the whole broader scheme of the stock market. Still pretty small. But as you know, if you get the right RVR going, you know how to catch good RVR or set up good RVR, then that's all you need, really. You don't need to be bothered with 20 different indicators, and including the news. And then trying to figure out if the yen is moving or if Samsung is having a problem, and then if this is going to recover, or are we going to have another fight with Iran and it's going to go down again. None of that impacts my trading at all. It's all about candlesticks and RVR. Very, very, very simple. Then you can actually focus on risk management, right? All your mental capital is held in reserve for risk management. Then you're doing it right.
It's a lot less taxing type of mental use.
Yes, it is. Absolutely. It's the same reason I never turn on the FM. Same reason. If anything's mentally taxing, it typically doesn't get much attention from me. There's There's a whole book on that. Anyone know what the book is called? Anyone? The book on efficiency, basically. Nobody knows that. If you don't know that in this room, I'm gonna have to kick you out.
Essentialism? Is that book?
Oh,
What are you
No?
talking
I don't
about?
know what you're talking about.
you don't know. You don't know. Nobody knows. Nobody knows. I'm gonna have to show it to you again. It's like show and tell kindergarten every day, man. Here you go. 80-20. Here it is. Same old thing. Nothing new. Oh man. I feel like I've been coming online for the last 3 or 4 years every day. 80-20, 80-20, 80-20. That's funny. Oh man. Anyways, all good. So who wants to talk about what before the New York Open and before Jill comes on, takes over? What's on your minds? Yeah, we got yesterday's sessions already uploaded on our YouTube channel. So that was about an hour ago. Everything seems to be up and running. And this one as well will be out shortly when we're done.
You know what I like about the Asian session?
Mhm.
From German time, it's somewhere between 1:50. I think that's Australian. It happens, and somewhere around maybe 2 to 15 a.m. in the morning. For you, you have to go 2 hours. You're in front of us, so for you, will be obviously somewhere between 3 to 4 a.m. It gives you a very clear signal, and you make a couple of $1,000 there, and the rest of the day you can do whatever you like to do. That's what I like about it. But the only catch is here for me, I live in the
Same.
worst possible atmosphere here. So I live in Germany. For me, it's 8 a.m. in the morning. For someone who is in the United States or let's say Canada, that should be somewhere around, I don't know, 7 p.m. to 4 p.m. for them. Would that be perfect actually to trade that?
Mhm. Yeah.
It's
Different
easy.
section.
Only 1-2 hours, and then you can do whatever you like to do. You don't need to care. Or maybe you can later on to come on to see is there anything. And if you have a downfall, for example, like yesterday, go to the 5 minute, actually wait for the pullback, actually, then you get some exhaustion there. So, and then you can continue with the trend and make money there. It's so easy, easy money, as I always say. It's easy money. Don't make it too complex. Don't go to footprint chart or whatever. No, you have to trade unorthodox. So they're not seeing you coming, whether you get in, whether you get out. That's it.
Easy money. Yeah. Well, that's a catchy term. Be careful with that because it does promote the wrong mindset, I believe, for a lot of people. I know what you're talking about, but be careful with telling that to a lot of people. That can be tricky. But I get the point. You see, with trading, what's a really good point is the market is always open, and you don't have to tie yourself to a specific time of market to be a trader. You don't have to, show up at the New York session, which means for you it may be 3 a.m. if you're in Australia or I don't know, whatever. And it really is unnecessary. No matter what time zone you live in, you can actually trade in a comfortable time zone for you, 9 a.m., 8 a.m., whatever time zone, whatever works for you, 4 p.m., because the market's always open. And yeah, recently looks like the Asian market has been interesting, lots of opportunities. There are other times when the New York session tends to have decent opportunities in the middle of the New York session. For me, sometimes I catch trades at 8 a.m. Sometimes I catch them at 7 p.m. Whatever. So it's really a myth that you gotta be there right at the New York Open. That's what's been popularized. I think that is a firm way to blow yourself up and overstress yourself. You really don't need to do all this. You really don't. You can just figure out your lifestyle first, figure out your time zone. I mean, where are you living? And what kind of time can you trade at based on everything else you got going on in your life? And that's it. Just use that time. Just figure out what goes on during that time. It's truly remarkable. I mean, when I first started trading, I was living in Colorado. Now I'm living in Dubai. And it's a 12-hour time difference. But I've had no problem trading at all, not at all. You know, there's no need to push yourself to be up at 3 a.m. or whatever rubbish is being told to you. Just don't waste your time with that. Don't waste your energy with that. Live your life. Really live your life, and you'll find a little space for trading somewhere in your world. That's all you need. That's really all you need. It's all good.
For the protocol here, when I say easy money here, I don't mean that everything is easy here. The only thing that I'm saying is I find it for myself easier to catch a good entry point at the Asian when the Asian market opens. That's it, actually.
I know what you mean. Fair enough.
I'm speaking of, if you've seen my post or heard me talk recently, I'm talking a lot about the 8 a.m. range, and I'm currently in one from the 8 a.m. range loss. And had I not, I first took a kind of a preemptive trade out the top, which got smacked in the face. Small scalp back to the midline, and then once we lost the midline, it's been straight down since. We're right at Asia's midline, so Asia's session midline, and we're losing it. If I get a setup for that would normally trigger an entry, I'll add to my position and keep trying to ride this thing down and see if I can Avenatti something this morning.
You talking about the ES or MES?
MQ.
Okay, MNQ. Yeah. Cool. Yeah. So what's going on that or NQ? Oh, I always mix
We're
this up.
rotating around Asia midline right now, so I'm trying to give it some time to breathe and decide here.
I see what you mean. Yeah, in the center. Cool. Yeah, another way to do it. And those Avenatti levels were really something, huh? Last year.
It's just 8 o'clock. I'm not doing the whole old school 7 lines on top, 7 lines on bottom. I never quite got that one. It's killer though.
That was wild. That was really wild. It's so funny looking back on that now. They wouldn't be very useful for me now the way I trade, because that was based on the 8 a.m. settlements in the New York session, all that stuff. Whereas a lot of trading I do is not in the New York session, so it's completely irrelevant, truly. So and now of course with futures, not options. At the time with options, and options were only available during the New York session. That was perfect. That worked out perfectly. And there's no guesswork. You know exactly what to wait for, and then put it on, and you know exactly what to wait for your target. So that was fun. But now I think the opportunities are even bigger, much, much bigger. I mean, the best I did then, I think once or twice I managed to get a 7 or 8 hour kind of trade. But typically I'd end up with 3 to 5 hour kind of trades with those options contracts. Now it's, just beginning a trade tends to be 15 or 20 hour. And then by the time I'm done with it, it's in the 50 hour kind of range. So it's, it's a different world completely. Much, much bigger. So anyways, that was a different phase. This one's bigger, better, stronger. So you're saying you re-entered gold again.
Hey, Avi, quick question.
Yeah.
With the adding that you do now, do you find it a lot more stressful pyramiding into the position, or are you comfortable with it?
Everything I'm doing now is 10 times less stressful than what I did before with options, because even then I used to add into positions using 0DTE contracts and maxing out the liquidity in the market and all those things. That was stressful, because even though I pre-planned my risk, just because of the lack of liquidity in the market for the sizes I was putting on, the risk would always be bigger when I'm trying to exit, either take a stop out or even take profits. Either way, I'd always end up losing quite a bit more than I planned for. So that was really stressful. On top of that, with the 0DTE options, especially as you get later and later into the day, the price has to move very fast in your favor, otherwise it disintegrates. So then you're always sitting there totally nervous, just hoping this thing moves right now, and you can't afford to wait for 5 minutes for it to start moving. So now I don't deal with any of that stuff. There's no liquidity issue. There's no time decay issue. and there's no even like the time that the market's going to close, because the market's open basically perpetually. So none of those issues anymore. It's a lot less stressful. Just on those few technical things. Wow, this is so much easier. I don't know why I wasted time with all that. Well,
And you're always bringing your stop to break even, right? When you do the ads.
Yeah, always at break even. And yeah, same as before. Even when I did it with options, it was always breaking. Once it's at break even, once I've taken the risk off the table, I'm never going to put the risk back on. I'll add on size, but I'll never put the risk back on. If it goes against me, I'm out without any loss. That's a firm piece of my risk management. Always. That is non-negotiable. Yeah, person. Yeah.
I'd like to add something in. I'm thinking maybe about not right now, but for next year to quit with the stock market. The thing is this: currently, I'm working with 2 prop trading firms. One is a German one. It's located in Holland. And I'm doing only stock, as you see, AMD, Tesla, and SpaceX now. So 2 was not enough. So I have 3 to watch here. And on the other hand, with the FTMO, I'm doing the NASDAQ 100. The thing is this: since I'm trading with the funded account in the stock market, not only I get 80% of the win, I also, since I'm managing a $1 million account, I'm getting 10K salary every month. Because of that, I think to myself, you have to do that. But honestly, it's very stressful to, on the one hand side, to watch NASDAQ 100 and also to watch 3 other stocks here. So I would encourage everyone, only for the beginning. In the future, you can change that if you like. Only one market and only one product. And I would encourage everyone to go to the futures market. It's up to you if it is NASDAQ 100, S&P 500, or go for me is NASDAQ 100 here. Because the way I trade, I see more sickness coming there than compared to S&P 500. So I would not encourage anyone to trade more than one thing at the moment. Do it with one thing, but after you feel comfortable, you can go on. But believe me, there will come a time you feel exhausted. I feel so exhausted to trade everything. So that's something that I'm working on next year, to quit with the stock market, only futures. Even I'm getting money here, because the reason is I'm so exhausted. Because I'm getting the salary, I have to trade a couple of days in the month and to watch there. And the thing is, for the 80-20 principle, you want to be free. And the reason why I say the Asian market, I'm that kind of person. Even I don't want to work for anyone else. The early bird catch the worm, actually, we say in the German language. So I like to, for example, if I trade the Asian market in the morning, the rest of the day I can do whatever I like to, actually. But if you have then the stock market and you have to wait with the 15-minute candle for your opportunity, you're stuck there. Then you can not longer speak about the 80-20 principle. Maybe you're talking about the 60-40 then here. It's no longer 80-20 anymore. So that's one thing. For example, not every money is good money, actually. If it stressed me out, then stay away from it. And that's, long story short, I'm trying to get away from the stock market probably next year after my 1-year contract is done.
All right, there you go. A man with a plan. I like it. That's good. It's really a good thing where you know what works for you, what doesn't, what stresses you out, and what helps you be more productive. That's really important. And it's pretty much the same for most people. The less you do, the less stressed out you get, right? Yeah, not too big of a deal. But I like that. Yeah, I've done the same. I moved away from the stock market, went into options, and moved away from all these tickers, went into just one single options contract, the SPY, and now moved away from that and then just into the ES contracts. So keeping it very simple, focus on the price action, focus on risk management, and you don't need much else. Everything else is mostly not worth your time and energy. So yeah, good stuff. Just on adding in, Hamza right here was talking about adding in. So let's use this example. This is pretty decent price action. Let's say you observe the breakout. You observe the consolidation breakout. Let's say you entered on the retest somewhere here. Your stop's above it. Then as it goes in your favor, you have this bottom right here, right? This is a firm bottom. Once the price goes into this bottom area, so probably here, that's when I'd bring my stop to break even, because I know it keeps buying up from here. If it buys up again here, well, I don't want any risk on, right? So I'd be, once the price is in this area, I'd have my stop at break even and then just leave it. Next thing I'd be looking for is a breakout and a retest of that bottom for me to be able to add in. The breakout did happen and did not do a retest, but after the breakout happened, you have the consolidation. And this is where I'll be thinking about adding in. Now, my stop loss is here, which is at break even. And I'm looking at this area. As it begins to go sideways, you get these two highs. That's encouraging. We know that now it's in a consolidation. Then you get this lower high. That's very encouraging. Once this lower high is confirmed, I'd be adding in a way where I can bring my stop loss from up here to just above this consolidation. So above these highs, right over here. So let's say I got in 10 contracts here. If I'm adding in here, I may be able to add 15 or 20 contracts. So I'm getting up to about 30 contracts now with the break-even stop loss right here, right? And then off you go. Now you have this support. Once you get the breakout, you get the retest. As if you're getting confirmation of the retest, that's where I prefer to add in even more. Where the stop loss is here, I'd try to bring it in perhaps above this wick, or if I'm a little more aggressive, just using the retest area that I just did. So I can bring it above this wick, just about there. So I started with 10 contracts there. Let's say I'm down up to 30 here. I may be able to add, perhaps if the stop's here, I want to bring it here. I may be able to add maybe another 20. So now it's up to 50 contracts, something like that. And I'd have my break even right there. And you're doing the same thing. Again, you have support here. You get the break, you get the retest. As you're confirmed with the retest, you can add in more. And you can bring your stop above the retest area, or if you're aggressive, bring it just above that previous support area. I'm more likely in this case to bring it up here. And in this case, you may be able to add even maybe another 20 contracts. From 50, you're up to 70 perhaps. And that's the way I'm trading it. And if any point it fails, it goes against me. I'm out without any loss. But you can see how it was first 10 contracts. And already in this area, you're at 10R or something, unrealized. And you're not even at your target. Your target, maybe this is your target. I don't know, whatever it is. But you're adding in, you're scaling in up. Over here, you could be up to about 70 contracts and then slam into your target. Your average price is about here. You're at 70 contracts. You go from here to down here. You know, that's a pretty good trade. So that's how it starts off with, you know, your risk group is in this area and your rewards down here. This is 20R or something. But by the time you scale it in, the way I like to add and keep the stop at break even, so no risk involved, instead of realizing the 20R that I started with, now you're in the 50R or 80R or 100R category when you hit your target. So that's the way I'm doing it. This is actually a very good example of how I use it. And you saw that in the trades in the last 2 weeks or so, the last, 3 or 4 trades I took that were all in the 50R category, and one was in the 100R range. Well, that's it. That's how I do it. For that, you need healthy price action where it goes and it consolidates, and it goes and it consolidates, and it goes and it consolidates. You can do that. If it's just spiking up and down, well, obviously you can't do that, right? Then you don't touch it. You want to leave it alone. And what's interesting is this works when you have a break and retest setup. But when you have something else like a reversal, that gets much, much more difficult. So let's use this example. It came from up to down and reverse. Let's say you're catching this reversal. Reversals are typically much, much more difficult to manage. The price action is always more dangerous, more choppy than just a simple break and retest. And that's because it's simply going back up where it came from. It's running back into all these buyers and sellers that interacted with it over here. So it's running into this. Imagine trying to add in the way I do into this kind of price action. You know, you'd be stopped out right here. You'd then get involved here and it'd be stopped here. And then it goes. So in a reversal, it's more difficult to add in and get those massive RVR trades. You can just put it on and leave it for 20R. That's fine. And that's probably the best way to do reversals. But it's, you know, that this is why it's just much easier to trade the break and retest. Firstly, the setup is easier to catch. Secondly, adding in and keeping the stop at break even works, especially when you're identifying, you know, the simple trend where it goes and it consolidates. It goes and consolidates. You know, you can expect that kind of thing after a breakout and retest. But in a reversal, nah, it's typically like this. Very choppy, very messy. What the best thing you can do is put it on, maybe here, stop down, and bring it up to break even, then leave it alone. And get your 10 or 20R or whatever it was that you targeted to begin with. So 2 different kinds of trading. You got to know what you're doing and when it works and when it doesn't. When adding in makes sense and when it doesn't. So there you go, Parsa. Or no, sorry. There you go, Hamza. That's what I'm really doing here. So I'm always looking for these breakout, retest. Makes a lot of sense. It's very, very easy. Much simpler than catching reversals. You can see this big consolidation. Here's a pullback. You get a breakout, retest, off you go. No big deal.
Can I ask you something about the settings of TradingView? You said when you add in, then you will get the average price. The problem that I have with my broker, each time I open a position is a new one actually. So I have to balance with the stop losses so they get break even. You said that you did it in the settings of TradingView. If so, could you show us how you did it? So for each open position, you do not have, for example, it's going to be one position and you get the average price then when you add in?
Yeah, you always get the average price. And this is the native setting. I haven't changed it at all. But let's see. I'll go into the sim trading account here. And let's see if we can do that. We got this on the move. But yeah, if your broker is treating you bad, you got to dump her, man. She's not treating you right. You got to get a new one. Really.
The problem is I'm trading with the funded one, and that's the best one actually in the world currently. But the only thing, Bassem, that I do not like about it is you get for each open the position a new position here. You can do a hatch here. That's possible. But on the other hand, yeah.
All right. Well, you got to get the right one. Then it works. Otherwise, we'll figure it out. I don't know what to tell you about these, prop firms and stuff. I have no experience, but it's not difficult. You can really get it done. So let's see if we can do it. So now I've got this trade ready to go. I've got 10 contracts. I'll put the stop just above this most recent pullback. I'll put the target here, round number 3750. I'm anticipating the breakout, and I want to get in on the breakout. Let's see if it happens. Oh, we might be waiting here for a while before this breakout happens. Let's see, got moved to the downside, we got upside, decrease in volume, lower highs. I mean, it's all likely to happen. Let's just enter it. This as an example. So it is the paper trading account, and make sure of that. All right, there we go. So I got that on. All right. So it's got 10 contracts short, and zooming out, you can see the stop is there and the target's there. Now let's say I wanna add in. I feel like it's ready to go. I want to put more size on. So again, let me get ready for another one. So for the new position, I'm going to go with another 10. I want to put the stop, the take profit in the same, the target in the same place. And the stop, I'll bring it here. I'll even bring my old stop here. So I want my new stop, my new average should be around this area, or my new stop, I want it here. Let's see what happens when you get into that. So now I've got a position of 20. Where is it? Have I? No, wait. Oops. Nope, it didn't get it. Hold on. Something went wrong. Sell. Yeah, I want to sell. Okay. Yeah, let's bring the target and the stop. So I always do this first. I put the target in place and where I want my stop to be. All right, there we go. Let's say I want my stop there. I even want my old position. I want the stop there for that as well. Confirm that one. And I didn't do it. That's because I'm doing it the wrong way. No worries. Let's put it this way. Put the target, and I want my stop on the new position here, the new stop, and sell. There we go. Now I've got 20, right? And that's my average price. You saw me enter this thing 2 times. It's not showing me 2 different trades or 2 different anything. It's got the position here is a grand total of 20 contracts, and its average price is right here at this red line. And this is where my stops are. Oh, sorry, my stop and my target. There you go. I can move that. That's my stop, and that's a target. I can move that. That's it. Just keep adding in. I'm not going to move it now. Just leave it there. There comes your breakout. And it looks like the volume is increasing.
The default settings of paper trading and some other brokers are like that, but some others, for example, like Advantage is like this. Each position you open, it's going to be a new one, actually. I like it to be more like to be that, but if you like to add in, that's going to be a bit difficult. So in your case, when you trade with your own broker, so the default settings is like the paper trading here. You get the average price here. Okay.
Yep. Well, that's the default in TradingView. I haven't changed anything. So talk with your prop firm, see if they can do that. Or
Okay. Thanks, but again.
Yeah, no worries. So here I'm into the 1 second chart. This was that support, was looking for the breakout. It did happen with some increased volume, then a great big volume push. This is what you want to see in a breakout. You have a firm area of a breakout happen, lots of volume happen right there. And then further volume happen further lower. So it's all very encouraging. And after this breakout, that's when I'd wait for the retest to happen on the 1 second chart. That's what I'm using these days. So normally I wouldn't enter here. There's no way I would enter this. This was just for an example to show you how I enter these positions. But I'd wait for it to pull back up, retest, and go, and then you get something out of it. But yeah, that's the setting the way I've got it, at least with the TradingView and NinjaTrader. You know, I just enter these positions, and it gives me the average price of my new entry. Looks like that. There's your retest. Yep, there it is. And what happened with it? It went up there, increased volume, and lots of volume. So lots of volume here and pushing upwards. And this will probably get the break even on this one. But as catching a retest is concerned, it's looking very tricky, right? Because you had a big move down, then a big move up. Look at this. So this area now is a very tricky zone. I'd be very careful with it. I'd wait for a break and retest here. Break of this low and retest, which in the 15-minute bigger picture, it's all in the same place, really. It's all kind of in this area. This is the 1 second chart, so it's really, you know, tiny. Look at that. The stop on the 1 minute chart looked like it was really tight, but on the 1 second chart, you can see how far away that looks, right? But anyways, this area is not something I would play with. Anyways, this is just an example trade. Don't really have a thesis on any of this stuff. So let's get rid of it. All done. Back to the 1 minute. You have, yeah. Looks like a bit of a false breakout. Got to wait for it to do a genuine one. 15-minute. Yeah, there's no way I would trade this on a 15-minute right here. That's just on the move, right? You don't catch a moving train. Leave it alone. The entry was up here a couple hours ago. This is where Hamza started getting involved. You still in it, Hamza? You got in, right? Again? From 4,000?
No, I'm out. I covered it at 4,000.
Okay. Right on. Yeah. Brian, what you got? You hit your trailing stop. Okay. Oh, yeah, you're doing the NQ. Right. Awesome.
I've re-entered and I'm back up. I re-entered small size because I'm green on the day, and it's not like really how I trade, but it was a nice little break retest of a local area. I'm up about 47 points on it right now.
Okay. Nice. There you go. NQ. Cool. Well, all right, guys. Jill, you're in here. Feel free to take it away whenever you're ready. It's your show.
Good morning, Jay.
Yeah. Oh yeah, guys, real quick. With the TradingView thing, I just remembered it's mildly different with every broker. That's right. So when you saw me enter that trade, right? Putting it on, and then it shows you your average price. If you have multiple entries, it's showing you your average price. It does that for me with TradingView. With NinjaTrader. But if you have a different broker, Interactive Brokers or whatever, it tends to have little nuances that are different. So you got to play with it. You got to work it out. Honestly, just a quick Google search will tell you whatever you're looking for. You want to figure out how to get the average price when you're using the TradingView platform with whatever broker, it'll spit the answer out at you. So that's where I got the answer from. And that's it. Again, I've only been using this a couple of months. It's nothing that I'm an expert at. So take a look at, how your setup is, what it tends to do. And usually there's always a setting somewhere in TradingView that you can use to adjust it to your liking. Shouldn't be too complicated. So we have MNQ here. We have the ES. What's going on here? Yeah, still stuck in this nasty, ugly zone. 3 years ago, I would have been thrilled about this kind of price action. Like, oh, wow, look at that pre-market consolidation. I'm going to wait for a massive breakout, and I'm going to catch that ORB here. I'm going to get 2R, and I'm going to be a king. Looking at it all now, it's just, wow, only amateurs trade this garbage. Because there's so much more out there. Wow. I mean, this was a move. This is chop. There's nothing here. Most of the time, the market is in chop. I mean, all of last week was a mess. And when you have a good move, a big move, that's where I'm trying to get out of a lot of chop. And honestly, it's always the consolidation that sets up the move. Here, big consolidation, then a big move. Get a consolidation here, and off you go. So a good consolidation is a good thing. It's worth waiting for. I always like it when I see a good consolidation here. You had a good one, then a good move, right? You're having a really good one now in this whole zone. When it decides to move later today or in the next few days, that's when I'll be there. And then you get another $100 kind of trade. Other than that, all the small stuff, I mean, yeah, you can play with it, but really, it's not worth the effort. All right, what else y'all want to talk about before the New York Open? Joe will be here in a moment and taking over, walk you through the Open and all the usual stuff. Let me know what you want to discuss the next few minutes while I'm here. And then I'll leave you guys to blow up your accounts at the Open. Just be careful with the New York Open. It's such a mess. I mean, really, you put in a lot of effort. If you're really sharp, you make 2R, and it's never worth it. Yeah, I made money with it over the years, but you average out about 2R. And there are easier ways to make more money, put it that way. A lot easier ways in my experience. So, I mean, it doesn't mean don't trade the New York session. It's just that opening session, the first 15 minutes, 30 minutes, where it's more entertainment than it is trading, right? So be careful with that stuff. And then you catch big moves. I really would like to see a false breakout on this one. Up and then back down, and then the big breakdown. Just a big continuation. That would be super. Let's see. What do we got here, Brian? Yes. Stop at break even going into the Open. Very good. There you go. Risk management. Put it on, take the risk off, and then let it sit. Awesome. That's the way you want to do it. Got a hammer here, but really it's all in chop. There's nothing here. You know what? This is one of those. Let's see if we have a couple of minutes before Jill comes on. I'll try and see if I can find that setup here on the 1 minute chart. I see one right here. What we were talking about yesterday, that whole comfort zone trading thing. Really mellow stuff, not complicated, but you can see it right here. You have this consolidation. The price is in its comfort zone, doesn't want to go anywhere. Then it finally goes. Then it reverses right back into that comfort zone and you take that profit. You short from there to there. But you only short from there for two reasons. One is it's at a key level where you know there's always been selling. So in this case, yes, that makes sense. That is a resistance area. And it gives you a reversal setup. I don't see that here on a 1 minute chart, but on a different chart, you may see it. The short, and it goes straight in there. I took a couple of these trades a couple of days ago. On the 1 minute chart, these trades only lasted about 5 minutes or so. So there's one. Basically, the price is in its comfort zone. It exits its comfort zone. And the only thing you're thinking about is that it wants to go back to its comfort zone. Just like any human being. You don't stay out of your comfort zone for too long, right? It's human nature stuff, especially in the modern age. So there's one. You can do this on a bigger time frame. Usually I would do more on a 15-minute if I'm really going to do it. Here's another large kind of comfort zone. Pops down. You're looking at this area, support. Yep, that's where it is. If you catch the reversal setup or break and retest of this consolidation, off you go straight back at it. That one's there too. How about this one here? Consolidation, comfort zone goes, your reversal setup. If that's your reversal zone, yeah, lots of resistance. Goes away from there, straight into that comfort zone. So everything is anchored on a comfort zone. Basically, it's a consolidation where the price is happy to be. Doesn't want to be away from there for too long. So trading that on a 1 minute chart in a choppy market is probably the only way you can actually trade a choppy market, like this kind of stuff. But really, there's bigger ways to trade. You can do this on a 15-minute chart. It makes a bit more sense. But there are much better ways to trade than this, I think. It works fine. I can read the momentum, so I'm able to do this, but I don't think it's worth it. It's very difficult to add into these kinds of trades. have it right here. Big reversal. Where would it go into? Look at this area. You can look at this area right here. This one makes sense. Get really pushed out. And then the reversal happened, and that's your target area. Short from there to there. This is a 1 minute chart, but you can see the same pattern on a 15 or a 30-minute chart. It's a fair bit bigger. So that's one way to think about things. What do we got here, Harnath? On MES, you have a consolidation. Please comment on the consolidation. All right. MES. Well, I'm looking at the ES. Same thing, really. You're talking about 7490. Where is that? 74. Oh, you're looking up here. All right. All right. Let's zoom out. So you're talking about the consolidation being up here, right? This area. And mine's 7465. Is that right? Did I get it right? Yeah, that's it. Okay. So I looked at this area and you looked at this wider area. Anyone want to tell us which one is right and which one is wrong? Any comments? Last couple of minutes here before Jill comes on. Which one's right and which one's wrong? Nobody? Everyone's too afraid. Now, there's no wrong way to do this. You have eyes for this. That makes sense. I just happen to look at this. So I have eyes for this. And none of that's wrong. That's fine. I don't think there's any issue with it. So, if you're using levels in a way where you can place the levels where your eyes tell you to place the levels, then use that. If you're using levels in a different way where they are well defined, like previous days highs and lows, then obviously you can't move them. They are just what they are, right? So if this is what your eyes are looking at, that's all right. This actually makes sense. I can leave it like this for a while, no big deal. Let's see what happens, right? So yeah, you can use it either way or not. Don't be worried about there's only one specific way to trade. There is not. The only thing I'll ever say about trading that's absolutely mandatory is that however you trade, you must have massive asymmetry on your side. So for every dollar you risk, you better make sure you get multiples back. At least that's the potential of every trade. 3 to 1, 5 to 1, 10 to 1, 50 to 1, whatever. You don't ever trade 1 to 1 or even 2 to 1. I think it's kind of silly. 3 to 1 is an extreme bare minimum to me. I mean, I don't even look at that stuff anymore. But really, you got to think about asymmetry. And whatever style of trading you've got, make sure you build in asymmetry into your trading, because that is your license to print money. That way you can afford the inevitable losers, the stop outs, and then you can still make money because your winners are bigger than your losers, multiple times bigger, 5R, 10R, all that stuff, right? That's the only thing that I'll say is absolutely mandatory about trading. Everything else is noise and entertainment and AI and bots and bullshit, and it's just a whole lot of fun. That's all there really is about trading, nothing more. So hope that helps. All right, Jill, you're in here. Let me know whenever you'd like to take over. It's your show. Got about 3 minutes or so till the New York Open. And I most certainly don't want to be here for that. That's not my thing. And it is sunset now, so I think I'll be outside somewhere. Much better place to be than the New York session, right? Much, much better. All right, let's end this one here. This has been fun, guys. Thanks for coming.